225% jump on your P&L might mean nothing, or it could be one of the most important things that you find out about your business. In this video, I'm going to show you how you can read your own financials like a CPA. We're going to go through what you really need to look for in your financials so you can identify the changes that are going to keep you ahead of your competition. My name is Jonathan Tiralosi. I'm a CPA with over 7 years of experience, and I've prepared and analyzed over 1,000 sets of financials over the years. I've talked to so many business owners who have their P&L ready. The last thing they want to do is read it and figure out what it all means. It can be super overwhelming to look at this stuff if you don't have the tools to figure it out. I'm going to lay this out in a step-by-step way that makes it easy for even someone who's not a financial guru. First of all, you have to be able to trust your numbers. If your books are messed up, you cannot even move on to the next step to analyze your numbers. You have to start with the fundamentals. And in this case, the fundamentals is preparing a clean set of books. I'm going to do a more detailed version of this in another video, but just for simplicity, these are the 4 steps that I use to close out all my clients' books each month. We start by categorizing the transactions, then we reconcile all bank and credit card as well as any loan accounts. We then review our financials for accuracy, and finally we analyze it to see what it all means. Categorizing your transactions is the most basic step. You want to make sure that you put everything into the right category. Otherwise, your analysis is going to be thrown off. Even on small transactions, you want to do your best to make sure your coding is accurate and consistent. Once your bank and credit card transactions are all classified properly, you can move on to the next step, which is your reconciliation. In your reconciliation, what you're basically doing is making sure that your bank and credit card transactions in QuickBooks are matching up to your bank and credit card transactions on your statements. This is just a way to make sure that you don't have any duplicate transactions, and also helps to see if you missed any. So once you have all your transactions categorized, you have everything reconciled, now you can move on to the review of your financials. And just to show you how we do this for our clients in our firm. Okay, so here's an example of a P&L that we're looking at in QuickBooks. We're looking at Craig's Landscape Design and Landscaping Services. What I will usually do when I'm reviewing the financials is I'll come all the way to the bottom here and just click the number on net income. And this is going to run a transaction level detail of everything that we've entered. So this is going to include all your bank and credit card transactions and anything else that you manually added, including sales receipts, bank deposits, and even journal entries that you've booked. And I will just click usually the name or the description heading just to sort it so that when I'm scanning through here, I can see that everything that was entered makes sense and is in the right place. I'm going to do the same thing for the balance sheet just to make sure we've put everything in the right place. And then once you're comfortable with that, you can move on to analyzing your financials. Okay, so now that we've reviewed our financials to make sure everything looks good, now it's time to run our comparative financial statements. Okay, so let's say, for example, that we're looking at the year to date through the end of May. So I'm going to go on the date filter. I'm just going to put this year to last month in this case. That's what we want to look at on the cash basis. And then, we want to look at this and say, how are we doing so far this year as opposed to, the same period of time from last year? And here we might want to see how are we doing this year through the end of May in comparison to the same period of time from last year. Kind of see how things are trending and see if anything strange sticks out. So I'm going to click compare to, and in this case, we will select previous period. For the P&L, I always like to look at the dollar change and the percentage change. Now, the percentage change might seem like it would be the most useful, but there are cases where it's not as important to look at. So let's say, for example, that we wanted to look at May of 2026, and we wanted to compare that to the previous month to see how we're doing. So I'm going to run this on the cash basis. I'm going to select previous period. We got the date selected for May. And I usually like to click these two, change in dollar amount and change in percentage. And we'll kind of get into why that is. As you can see, you have your May financials and your April side by side right here. Then you got your dollar amount change, and then you have a percentage change. Now, the first thing I'm doing is I'm scanning this change list for anything that really jumps out at me. So a lot of times your main accounts, like your revenue account and then your main cost drivers, maybe your payroll or outside labor is in there. Those things typically tend to jump out pretty quick. Cost of goods sold is another good example here where, it's a huge cost driver and it could tend to jump out a lot easier than some other accounts. And as I'm scanning, there's a couple things that just seem to be a little bit larger of changes than other accounts. So it looks like as you scan here, everything's within, a couple $100 change. Here, for example, you have plants and soil income increased by 1,900 over the past month. And when it comes to your income change is 1,885. So that's a pretty big change. Seems to be driving most of the change for your income. So we're going to take a look at that one. And we can see here there were two pretty big invoices from Cool Cars that seem to be driving most of the activity in this account. Okay, so another example here, we got the miscellaneous expense and other expenses seem to be increased by 2,400. And our total operating expenses were 2,200. So that's a pretty big line item for this company. So we're going to click in here and see what's going on. Okay, and it looks like maybe the company has some stuff in the wrong place. We're using a sample account here, but this payment to the insurance agency seems to be driving a lot of change. So if this was in the insurance category, you'd probably see a $2,000 change and notice that, likely some kind of annual insurance premium was paid in this month. And this is the kind of analysis that you can do in your own books. It's going to be really simple, but it's really going to help you stay in control of your expenses and also know what's going in and out. I've had countless clients that had instances of fraud that when we went back and did a cleanup, it was already too late to go back and try to recover this money. We just happened to find it after the fact. But even outside of the rare case of finding fraud in your books, there are likely a lot of areas where you can cut back and reduce the waste in your own business. So aside from just looking at the biggest dollar amount changes between different accounts, we're also going to be targeting certain accounts to look at to make sure to see how things are trending because of their impact on the business. So for example, your revenue. Everyone wants to know what's going on with their revenue. So the first thing that I would look at, no matter what, even if you had a 1% change in your revenue, you want to look at that and see how things are trending. For most businesses, you're going to then be looking at your cost of goods sold, payroll, and any outside labor. Outside of those main categories, you might also have some other accounts that are really relevant to your business that maybe some other business owners wouldn't check for their business. For example, if you're spending thousands of dollars a month on software and subscriptions, you might want to look at this account each month to make sure you're not paying for anything that you're not using anymore. Another example is if your business heavily relies on equipment rental, you might want to track that category and make sure just to see how things are trending and see if anything pops out to you as out of the usual. Also remember that the more analysis that you do, the more you'll uncover. So if I just look at, for example, this past month versus the prior month, I may uncover a few things, but I would uncover way more if I also looked at the same month from the prior year. And if I also looked at year to date this year through the same period of last year. It's just going to give you so much more information to compare on and allow you to make the decisions that are going to move your business forward. Next time you wrap up your financials, give this a shot and let me know how it went in the comments. If you have any questions on any part of the process, also feel free to drop us a comment or a DM. And if you don't have the time to do this process or it's too complicated for you, that's what we're here for.